All right, welcome everyone to this presentation. I'm so glad that you all could join us. We're going to discuss in this presentation, we're going to talk about commerce and financial remedies. Now, this presentation is sponsored by REAP, and REAP stands for Restoring Economic Empowerment and Prosperity. So now let me ask you this. Are you dealing with any of these financial issues? Are you dealing with the fact that maybe your mortgage payment has increased? I know a lot of individuals since the 2007-2008 subprime debacle that has taken place in the United States. Maybe you've gotten an adjustable rate mortgage and your mortgage payment has doubled. I'm not sure, but I have heard a lot of stories from a lot of clients. So your mortgage payment maybe has increased. Maybe that's an issue for you. Or maybe the mortgage payment hasn't increased. It's the same amount, but maybe your income has gone down and you're having troubles paying that mortgage every month. Are you dealing with too much credit card debt? Are you dealing with maybe your car is about to be repossessed? Again, maybe your income has drastically reduced and it's just kind of hard for you to keep the balls floating in the air, so to speak. Are you dealing with student loans that are out of control? In fact, that is going to be one of our next bubbles that will pop in the United States economy. Are you dealing with the fact that it's just hard to make your monthly commitments? You know, your gas going to and fro, your groceries, your utilities, just all those little bitty things that add up to a lot on a monthly basis. Is it hard for you to make those commitments every single month? And then last but not least, let me ask you this. Are you dealing with the fact that you have a zero balance in your savings set aside for your retirement? These are some questions to ponder. Now, I know these questions may invoke a lot of doom and gloom, but I am here with good news, and I am here to share that good news with you. There is hope. There is liberation for you financially, so just hang on here and we'll get to that. Now, I'm going to encourage you, if you're in a noisy area, put yourself in a quiet area. We've already muted the lines and everything here so that the presentation is not disturbed, but make sure that you're paying full attention. This is probably one of the most important presentations that you will ever be a part of. Also, you want to stay until the very end of this presentation to get your free gift. Yes, we do have a free gift for you, but you'll need to stay to the very end to get that. And if you're watching a replay of this presentation, you don't want to skip around and try to jump to the end because it's all set up by the time that you're on the presentation. So watch it from the very beginning to the very end to get your free gift. Now, let me ask you this really important question. What if we could tailor a plan for you that would allow you to pay off all of your debt obligations and build a retirement nest egg without using any of your own money? Yes, you heard me correctly. I said without using any of your own money. Sounds too good to be true, right? Well, it's good and it's true. So let me shed a little bit of light here for you on who I am really quick, and then we're going to jump right into a few details about how we may be able to help you. My name is Kenitra Negonia Alam. I have a lot of pen names on the internet. Cashflow Queen is one, Queen is one, Negonia Peace is one, and these are just different handles for different things that I've done out here on the internet. I've been an entrepreneur since I was the age of 15. And what you're viewing here on this particular slide is these are 6, 7, and 8-figure business properties that I have been directly involved in. And my most recent, which is REAP, that I'm so proud to be a part of, so excited to be nominated and awarded the very special position of marketing director. So you will hear a lot from me if we decide to pursue this relationship further. So this is just to let you know kind of my background. I've been, like I said, an entrepreneur since the age of 15, have worked with a lot of different companies, have had lots of success, have had lots of failures. Through being an entrepreneur, it led me down the road of really studying and understanding what money is and how true business is really conducted on the public side of our economy as well as on the private side of our economy. So I have studied probably for the last 2 decades things like commercial law, contract law, law of merchants, BIS, which is a Bank of International Settlements, and how they operate and how we, our consortium, actually works with them on some of our strategies and things like that. But just know that I'm not a lawyer, I'm not an attorney, I'm not an insurance salesman, I'm not a certified financial planner, I'm not any of those licensed things. What I am is a wealth coach and a wealth manager. And most of my clients are high net worth individuals, accredited investors, family offices, hedge funds, and those types of entities is whom I target. Working with REAP, we're doing some different things here to reach the average everyday hardworking citizen. So at any rate, before I go further, let me just read this disclaimer so that we're all on the same page and we understand one another. We do not provide tax, legal, or investment advice. All information obtained is strictly for educational purposes only. This website or advertisement shall not constitute an offer or solicitation to sell or buy securities. No amount of income is guaranteed, nor is it implied. All illustrations are only for educational purposes and is not intended to serve as a guarantee of income. Any information relating to any particular stocks, options, etc. is for education and entertainment purposes only and should not be relied upon by individual investors to make or not make specific investment decisions. Investors should seek financial advice regarding the suitability of any investment strategy based on their objectives, financial situation, investment horizon, and their particular needs from a registered financial advisor. Yes, that was a tongue twister. All right, so let's dig in here and get to the meat of why we're here. I'm going to talk to you today about two different economies. Now, we have a public economy and we have a private economy, okay? 99% of you here and 99% of the folks around the world participate in their public economy. Now, what Wikipedia defines as public economics is this. Public economics, or economics of the public sector, is a study of government policy through the lens of economic efficiency and equity. Basically, this is the system that you were taught in school, the system that your family teaches you. It's the public side of the economy. It's the stock market. It's going down to your insurance agent, having them get an insurance plan or whatnot, your financial advisor, or your job giving you a 401k plan, and you've got these crappy mutual funds and all of those types of things, right? And also at the time of this webinar here, as most of you know, we're getting ready in the United States for the presidential election, right? That's all on the public side of things, okay? That's all the public economy system, okay? Now, the private economic system, and I say economic economy, I just tomato, kind of go back and forth with that. But a private economy is this. The private sector is the part of the economy, sometimes referred to as the citizen sector, which is run by private individuals or groups, usually as a means of enterprise for profit, and is not controlled by the state. Areas of the economy controlled by the state being referred to as the public sector, right? So the private economy, where private individuals participate in business via contract law, commercial law, things of that nature, stuff that I told you I've been studying over the last 2 decades and I'm absolutely fascinated with. And I've got lots of friends that are also fascinated with this, and this is kind of how we created this consortium, if you will. And because of that creation, it gives you an opportunity to liberate yourself financially. And we'll go further here. But just keep the definitions of public economy and private economy kind of just in the back of your mind. Another thing I'll say about this, and then we'll move on. The public economy, 99% of people participate in the public economy, right? And it has a 99% failure rate. Soak that in for a minute. Now, the private economy, only about 1% of people participate in the private economy. And guess what? It has a 99% success rate. So keep that in mind. Now that you know there's two different economies working simultaneously, you can now pick which side of the fence you want to play on. Okay, now would you like for me to show you how to pay off all your debt obligations and secure your retirement with none of your own money right now for free? How many of you would like that? Let me know in the chat box right now if you would like for me to show you how to pay off all your debt, secure your retirement with none of your own money right now. Show me, show me, show me. Okay, I'm reading the chat box. I got to get more yeses before I show it to you. If you guys don't want it, we can stop the class, the presentation right now. So give me lots of yeses. Okay, all right. 5 more yeses and we'll go. Okay. All right, great. All right. Sounds like you guys are excited. You want to hear this information. Well, I'm excited to present it to you. Okay, well, I don't need to tell you that the benefits of living debt-free, right? You already know those benefits. The reason I'm giving you this information for free is very simple. Some of you will want me to assist you personally to implement this plan. And well, that's quite frankly what I do as a wealth coach and wealth manager, okay? So no hidden agenda here, right? Now, what I'm going to show you now, I'm going to show you my wealth formula. I created this a few years back. And this wealth formula, you can use it on the public side, you can use it on the private side. The public side, it works great. The private side, it works probably 10 to 100x better than on the public side, okay? But here's the deal. The reason why I created this and I laid it out this way is because for most people can't wrap their head around the concepts and the strategies that exist on the private economy because they're just so conditioned, they've been just so brainwashed on the public side that they just can't fathom anything different from what they've been taught, okay? And that's okay, I get it, I understand it, and that's why I created this particular formula for those individuals. Like I said, there's only 1% of people that participate on the private side. So I know that that's not a lot of you that are here on the call because, you know, sometimes when we hear something new or we hear something different that goes against our beliefs and what we've been taught, we immediately put it in a category of it's not real, it's a scam, or it's this, or it's that, because what it does is it shakes your belief factor. And if you're not a person that's really open-minded about things, knowing that what you don't know sometimes can hurt you, you know, if you're not open-minded in that regard, then you'll just revert back to the way you've always thought and not allow yourself to broaden your intellect so that you can bring in more ideas and things like that, okay? I don't want to get real philosophical on you, but just know that I created this particular wealth formula for those 99% of people that said, you know what, I'm going to do things the way that I've been doing it. I'm not changing anything. I'm going to participate here on the public side of the economy, and I'm going to make it work even though I know it has a 99% failure rate, okay? So with that being said, here we go. So you may be familiar with this quadrant, right? If you're a fan or if you have read Robert Kiyosaki's Rich Dad, Poor Dad, then you know about his cash flow quadrant, right? Well, in reading that and researching that book, this is kind of where I got the idea of the wealth quadrant, right? I wanted to make everything simple, put it in fours. You got 25%, times four, that's 100%. I wanted to make it simple. So here it is, right? And now if you have not been taking notes, this is the time that you should really pull out your pen, pull out your notepad, and take some notes, okay? So the wealth quadrant, it's A, B, C, D. I wanted to make it very, very simple. A, B, C, 1, 2, 3. Simple, easy peasy, right? The A in the wealth quadrant stands for arbitrage. Right. Let me explain to you what arbitrage is. Arbitrage is this, okay? It's where, I'll give you the example of a bank and a portion of their business model and how they make money. Okay. Now, when you open up an account, let's just say it's a checking account. No. Let's not say it's a checking account. Let's say, let's use a CD example, right? Because I'll be able to give you some real value here in using a CD. So let's just say you opened up a CD. Okay. Now I'm going to pull up here. Actually, let me type this out or draw this, okay? This is my whiteboard here. So the A stands for arbitrage, and you got to bear with me here because I'm doing this with my mouse. And I'm sorry for the click. That's an A. So the A is arbitrage, okay? So now, let me show you how banks make their moolah, okay? So let's look at Bank of America CD rates, okay? Okay. All right, these are their current CD rates, okay? So now, when you go, and we'll use this one, let's just use the highest one, the 36 month, okay? So just so you know, when you go to the bank, you have any account with the bank, what you're doing is you are giving up total rights, total control of that money, those assets, okay? You're giving up total control, right? If it's a checking account, a CD, any type of account you open up, you're no longer in control, okay? They're in control. So that means that they can do whatever they want with your money, all right? So let's say you bought a CD from a bank because you had $10,000. You were going to put it in your checking account anyway. So you say, well, I'll just buy a CD and I'll earn 0.12% on my money over 36 months. Now that 36 months, that's 3 years. So that means you can't touch the $10,000 for 3 years. So this is how arbitrage works, okay? So remember this 0.12%. Remember that, okay? Now, I'm going to go here, and we're going to put in bank. Okay. All right, so now we're going to put in Bank of America credit card rates, okay? So now, they promise you 0.12% on your money, and you gave them $10,000 to hold for you for 3 years. So let's say I go in there and I apply for a credit card, and they give me a $10,000 credit line, okay? So now they're going to charge me, going right here, interest rates and fees. I'm just picking one of their cards, okay? They're going to charge me on the high end 21.24%. Okay? Now, this is not their money. This is your money that you put down for your CD. So let's take 21.24% minus, remember, the 0.12%, which is what they're going to give you for the use of your money for 3 years. Okay? So the spread the spread, the arbitrage for the bank in this example is 21.12%. Now let's look at what that does with $10,000 over 3 years times 21.12%. So that's $2,112 per year times 2112 times 3 years, 6336. Okay, and remember your percentage has already been taken out of there, but let's just for grins see what your percentage would be for your $10,000. 10,000 times 0.12%. So that's 12 times 3. You make $36. Wow, $36 for 3 years. Wow. Yeah, and that's what folks are accepting out there. So this is arbitrage, right? So if you take 6336 minus, they made $6,300 on your 10,000. You made 36. Okay, that's what arbitrage is. Okay, so what I teach my clients is I teach my clients how they can become the bank, how they can utilize arbitrage for themselves. And that's just one example. There's several examples. So that's the A. Now what does the B stand for? The B in the wealth quadrant stands for B, bold. Now why did I include that in my wealth formula? The reason why I included that in the wealth formula is because if you are, again, totally rigid on your set of beliefs and your ideas on how the economy works, and this is, how you should do things, and you're not open for new ideas, better ideas, more profitable ideas, then none of what I say from here to the end of this will resonate with you. Okay, so the B in the formula is to be bold, to stand out, do something different. Again, you're talking about a system that has a 99% failure rate, so obviously following the crowd, following the herd is definitely not the way to go. All right, the C in the wealth formula, and if you apply this wealth formula in your life, you can literally pay for things, have things, acquire things without using any of your money. This is a long one. Probably should have hooked my mouse up to do this, but that's okay. All right, so the C in the wealth formula stands for capital leverage. Okay, capital leverage. What does that mean? Well, what that means is taking an asset and leveraging it for capital, and then leveraging that capital to create more capital. Okay, I'll give you an example. One of the ways that we do this with clients, and I'm going to go in a little bit of detail here with the real estate example, but if our clients have assets, they have property, either residential or commercial, we can leverage that asset, create capital, and then create a lot more capital through our private economy, because again, we belong to a huge consortium that has lots of different strategies for our clients to partake in, with the private bank, private placement, trade platform, private contracts on different things, and so forth and so on. Okay, so I won't go real deep on that. But another way that, again, this was designed for the public side of the economic system. So let's just talk about credit. And I'm not talking about personal credit. Let's talk about business credit. A lot of individuals are not familiar or educated on the fact that they can build business credit and then leverage that credit for more capital. What we do, one of the companies that I'm the managing director for, this is one of the product offerings that we offer to clients, is we build them out over, say, a 6-month, 4 to 6 month time frame. We'll build them out a business. We'll get it credible. There's about 20 to 22 different points that banks look for to extend credit, to a business, and we cover all of that. And typically, we could get our client anywhere from, let's say, 30,000 to maybe 50,000 in about 6 months. Now, having credit is great, but having credit and then leveraging that credit for more capital to expand your net worth is ingenious. And that's exactly what capital leverage is. So capital leverage is being able to, and I'll tie this in once we get to the D part, but being able to, just like the bank in the section arbitrage here that I showed you, where you got a CD, and their obligation is only to pay out 0.12%, but they're taking the asset, the 10 grand, and they're loaning it out on a credit card loan at 21+%. So they're getting that spread. They're leveraging your money, basically your asset, to increase revenues, okay? And you can do the exact same thing, okay? So you can take a line of credit, and you can take that line of credit, and you need to be able to put it in a vehicle, which I'm going to talk about in Part D. You need to be able to put it in a vehicle that's going to produce a higher return than the cost of that capital. So let me just break this down for you. In fact, let me give you D first, and then I'll break this down. All right, so D, now this is the only time that I'm going to say it's okay to have a DUI. Okay? What a DUI is, and I'm not going to spell all that out here, but a DUI, this stands for Diversified Unconventional Investing. Diversified Unconventional Investing. This is the only time it's okay to have a DUI. Okay? So you need to be able to have a vehicle where you can diversify, and unconventional is because with most of your conventional, obviously on the public side, the returns are just not anything to really write home about or be happy about, especially with the Federal Reserve, lowering the interest rates, and we haven't had a rate hike in, probably, since 2007, 2008, right? So savers are losers on that side of the fence, okay? On the private side, obviously there's a lot more diversity, a lot more strategies that you can take place in. But I'm going to give you one example. And this is what I recommend to my $20,000 paying clients at minimum. I recommend them to, let me pull this up. I recommend them to get a managed account. And with a managed account, and then also a managed account, I'll let you Google that, but it's just really an account for high net worth individuals. No one touches the money but you. And if you have a set of traders or a brokerage firm, they can actually see what's in the account. They can mimic their trade portfolio with yours, so you could be a sub account on theirs. I don't want to go too deep on this, but it allows you to safeguard your money, right? Because if you buy stocks, if you put money in hedge funds and things like that, you don't see it. You can't see it. It's not transparent. So a managed account is transparent. That's really the definition that I wanted to get to. So let's just say you had a Rolodex of elite traders. And these traders, their whole job is to, obviously for them to, make money with what they do with their trading companies, but also to help you as a client to make money in your managed account. Now, we have, I'll say on a typical vetting process, it takes about maybe 2 to 3 years for us to totally vet out a trader. And these particular traders are, very hard to find, number one, and number two, they only deal with certain groups of people and things like that, right? But at any rate, um, with the contact within the consortium that we have, and we've been able to leverage this relationship, these traders will typically, on average, bring in anywhere from a 5 to 7% ROI. So let's just say it's 5%, okay? So if your cost of capital, say it's a credit line, is 1%, right, per month, and you're able to leverage that capital and get a 5% return, and your net ROI is 4%. Okay, see that? So 5% minus 1%, that's 4%. Okay, so basically this can produce a monthly income for you if that's something that you need, or this can be a nest egg for your retirement. And if you look at it, 4% a month times 12 months in a year, that's a 48% return on that portfolio in 1 year's time. So you're talking in 2 years doubling your portfolio. So this is the beauty in the wealth quadrant, in the wealth formula, right? You've got arbitrage, which is what you're doing with a managed account and actually using a credit line. So you've got the arbitrage, the boldness of stepping out, doing something different, the capital leverage, which is what I just discussed with the credit line, and then the diversified unconventional investing is what I talked about with the managed account. All right, so I know I ran through that fast, but I needed to because I got to get through the rest of the presentation. If you didn't catch every single detail, I'm going to encourage you to watch the replay on this, because literally this alone, you can stop, never do business with us, never pay us a penny, and you can totally have a very, very happy life financially, okay? All right, so let's get to the rest of this. All right, now I want to talk about, and remember, this wealth quadrant, I designed it for the public side of the economy. All right, for the private side of the economy, I want to give you an example on real estate, because with our clients, most of our clients will live in a home that they have a mortgage on, okay? So remember, in the beginning, my question was, if there was a way that we could show you a plan where you could pay off all your debts, everything, right, and build a retirement nest egg without using any of your money, would you want to know how, okay? One of the strategies with our real estate example is how that can be done. So these are some of the components with this particular strategy. What we're able to do is actually show you how to leverage the asset, okay? We show you how to leverage the asset, kind of just like we talked about with capital leverage, leveraging the credit line in the wealth quadrant. We show you how to leverage the real estate asset in this particular strategy. Now, it doesn't matter how many liens are against the property, and it doesn't matter if it's residential or commercial. In fact, the real estate, you could be upside down, okay? You can owe more on the mortgage than the actual property is worth, okay? We will basically show you how to extract capital via our private economy, extract capital from that asset, and grow the capital to where you pay the mortgage off and all the other things that are associated with the real estate, utilities, maintenance, upgrades, things like that. Also, the beautiful thing about this particular strategy is the real estate is kept secure. The title is kept secure. I had a client that we're working with just recently. We onboarded this gentleman and his family, and his question was, well, the downside risk is, if I do this and title this in you know, you guys' consortium or some other entity's name, you guys can take my property. And absolutely not. That's not what this is all about and what this is set up to do. This is set up to liberate people, liberate families. So with this strategy, however your real estate is titled right now, if it's you and your spouse, if it's your family trust, or however you have it titled, that's kept in place. Title does not change. And that is the safeguard and the beauty of this. And then you continue to live in the property. Yay! You stay in your home. Yeah, because we're just using the asset. We're just going to leverage the asset. Also, last but certainly not least is I have some clients that will come to me and they're pending a foreclosure, some sort of foreclosure lawsuit, foreclosure action. And in some of those cases, not all of them, because it just depends on the stage that you're in, but some pending foreclosures may even qualify for this strategy. So to wrap up this example here very quickly, is that if you've got a real estate asset, if you have real estate, whether it's residential or commercial, it doesn't matter if you got liens against it, you can be upside down, sideways, it doesn't matter. We're able to, within our consortium, within the strategies that we have in place with the private relationships with private banking, the private trade platform, and all those different things, we have a strategy where we can show you how to pay that mortgage off and everything that's related to that property, and even have a reserve fund set aside in case you ever have any emergency needs or anything in relation to your property. So very, very cool. Very, very cool. Now let me ask you this. Would you like for me to custom tailor a realistic plan for you to not just rid yourself of all your debt, but to increase your net worth as well? Would that be a benefit for you? I mean, I've given you the wealth formula strategy. You can definitely go off with the ABCD and have a ton of fun and just have a beautiful, fabulous life. But I know some of you want hand-holding, you want guidance, and you want assistance. So would a custom-tailored realistic plan for you, would that help you? Okay. Well, I'm happy to help design a custom financial liberation plan for you. That way you can stop worrying about bills and you can start enjoying life. That's what it's about. God put you here to enjoy all of the abundance that's here for you. So I offer this service because I'm a consultant and I'm a wealth coach and I'm looking for dream clients. There's a good possibility, if you fit the criteria, that I can help you. And if you find that the plan that I create for you, if you find that valuable, you may wish to become a client. And if that's the case, my rates start at $3,000. That's with the REAP organization. With my other companies, our rates start at about $20,000 and up. But REAP has asked us to drastically reduce that because the whole idea of REAP is to help individuals restore economic empowerment and prosperity. And we're very happy to do that, okay? Now, with that said, please understand this. I'm not offering you a sales pitch in disguise. I promise not to pester you or pressure you in any kind of way. In fact, if you feel that I've wasted even 1 second of your time, then you just let me know. Let me know. Say, hey, Kenitra, you've wasted my time, and I will immediately write you a check for $50 to compensate you for your time. Now, before we go any further, you need to know that I can't help everyone, unfortunately. I can only be of benefit to you. First of all, you've got to have a lot of debt, right? You must have a lot of debt in order for me to be of benefit to you. If you just have a credit card here or something, cell phone bill there, my service will not benefit you. So you must have a lot of debt. I can only be of benefit to you if you need a bigger, better plan for your retirement. Maybe what you've got is just not enough and you know that you need more. You have a piece of real estate that you're living in, or maybe you got a commercial property or so forth, and we can leverage that. You know you need to do something better for retirement, then I can help you. I can only be a benefit to you if you are willing to follow my plan. It's kind of like going to the doctor, and the doctor prescribes you a daily regimen of exercise, eating habits, and maybe a prescription, and you don't follow the plan, then you're very likely not going to have success. Okay? Another thing is I can only benefit you if you communicate with me. Okay? Sometimes it's going to be on a daily basis. That's going to depend on the plan that we put together for you. I may text you. I may call you. I may send you an email. I need you to respond immediately once you see that that call, that text, or that email, because I need to give you some information or I need to get some information from you. So we have to be able to communicate quickly and not sit on our hands and procrastinate on things. And then the last thing is I can only be of benefit to you if you take action on the plan. That's just the bottom line. If you're not an action taker, you can't follow directions well, this service, my help, will not be of benefit to you. Okay? Now, here's what to do next. You want to schedule a planning session with me by clicking on the link below. This planning session is absolutely free. As long as you fit the criteria, there's no problem. I will schedule time with you and we'll speak. What you're going to see is you're going to see a form with some questions about yourself, about your debt, your financials, and also your hopes and your dreams. I want to know what your objectives are. What do you want out of life? And if I can help you with our consortium and the different strategies and contacts and relationships that we have, then I want to do that for you. So you want to fill that form out as accurately, as completely, as thoroughly as possible. Now, I personally go through each and every single application form that is submitted. And if you're a good fit, then what I'll do is I will email you my calendar so that you can pick a date. And that way we can talk on the phone, we can talk in person, we'll meet, and I'll put a very, very good plan together for you to help you and your family. So I want to thank you for your time. I appreciate you spending this time with me. I hope and trust that you received great value out of the information that we've shared here with you. What you want to do at this point is click the link below to fill out the application for us to speak. And I look forward to talking with you and helping you. Have a great day, and God bless you.